Oh yeah. Oh yeah. Let me tilt it down a little bit. So, did you click on this? Is it showing? Now we get to see. Okay. Well, yep, this is happening.
Awesome.
So, three goobers. Okay.
All right.
So today, obviously, with again market coming to holiday season, is like what we like to call it. We have a list of things that we're going to talk about in regards to myths in the mortgage industry and real estate. So we can alternate. We can do one by one, and we'll just kind of go in depth about each one.
Perfect. All right. Let's start with this number one here. So it says number one is the mortgage question.
Yep.
It says you can't get a mortgage with a bad credit rating.
Subjective. Very subjective. You don't need perfect credit. I can tell you that much. You do not need perfect credit at all. Some lenders go down to 550. Mm-hmm. I've even seen some go down as low as 500. But does it mean that you're going to get the perks of maybe somebody with good credit? No. Mm-hmm. Okay. Now, it's one of those things where we do stress that you do have the ability, you do have the option to get into a home, which is awesome. The bomb.com, I'm pulling for you. We're both pulling for you. But understand the riskier you are, the more hurdles and hoops you're going to have to jump through, but it doesn't mean it's impossible. So,
well, define just real quick without going too deep. What do you mean by risky?
So if your credit score, okay, so let's just say you just have some severe missed payments. Okay, let's just say let's just say in the last 2 years. We'll go for 2 years. If you've had any missed payments and you've had maybe some things let go, going to collection, stuff that's just really dragging that credit score down, you add a layer of risk each time because you got to think, you are asking to borrow money. And so how do we dictate if you're going to be able to repay, right? It's called the ability to repay. So unlike, 2007, 2008, dude, they
didn't care.
They did not care. No, there was not a care in the world. You literally could have been flipping burgers and working minimum wage, just had your car repossessed, but you know what? Here's a $400K loan. Yep. Go out and buy a house. Yep. Nowadays, like I said, credit is a pretty big factor. And so no, you don't have to have perfect credit. Hell, even sometimes you don't even have to have a credit score, period. We can do a non-scorable, which is pretty cool. But I would say as a whole, just understand, guys, credit is very important when it comes to these things. You're going to have a lot more flexibility, a lot more gates opened up to you when it comes to getting a house. But don't let, if you think that your credit score is not up to par, honestly, just reach out to us. Let's put you on a game plan or something.
Right.
Yeah.
Okay. Let's do some myth number one on the RE side. We have real estate always appreciates in value. That one's kind of odd. Real estate always appreciates in value. I would say that's a good amount of the time, yes. You can have a depreciating asset, but it's going to be dependent upon where, and then it's also going to be dependent on the condition. So, for example, real quick, without getting too deep into this, is going to be...
what was that?
There it goes. It's back on. This is lost signal. Anyways, so if you had a house that you bought that was a prime, great condition, say it's a brand new construction, right? So Kenneth over here, he sells you a house and brand new construction. Yay!
Right.
Well, 3 years goes down the road, you've done nothing to this house.
Right.
So, and what I mean by nothing is, let's say there were some few cosmetic things. Maybe a giant windstorm came through and it ripped half the siding off. That's the kind of thing, right? And all of a sudden, so now you're your OSB on the side of the house is rotted out. You know, this is extreme circumstance, right? But I could not come back, or Kenneth could not come back to relist this house for you,
right.
And you think that it's going to be worth $1 bazillion more than when you bought it 3 years ago, right. Because it's not in that kind of condition anymore. It's not in a top rated condition.
Well, and I think that's a good point, because even at closing, it's pretty much like saying, hey, you're going to keep this house up to standard to make sure, right? It's not like
I was about to say, it's in your loan document. It's in the promissory note with the loan company.
Correct.
Yes, exactly. You're not going to default. You're not going to let this thing fall into disrepair. You're not going to, you know, all these kinds of things. It looks like it's back up now.
Okay, yeah.
So I mean, that's I hope that kind of, in the location wise is going to be, if you have, like, say you bought a house in one area of town, and then that area is depreciating over time,
right?
For a myriad of reasons, well, it could cause it to go down.
Well, you know what? Let's talk about your home state, brother, Mr. Michigan.
No. That's actually really, yeah.
No, seriously. Yeah. I think, and you can get some insight on this.
Yeah.
I mean, truth be told, even if you don't live in Michigan or have never been to Michigan, honestly, I mean, you see it all the time, dude. They can't even there are some areas over there they can't even give out houses.
Absolutely.
It's just because, I mean, literally, you could buy a house for like $5,000, which is
understand,
absolutely bananas.
And understand with this too. So it kind of, I hope this clears it up. To make it simpler, you have what's known as a market value. Right. So your market value of your house. Let's say you have a house that let me back up. Market value, and you have appraised value.
Right.
So let's say Daniel here is an appraiser. He goes out and he appraises my house that I'm selling to Kenneth. He appraises my house at $210.
Mm-hmm.
Right. But let's say before the appraisal happened, I had 3 different offers, and my house was bid up to $215.
Right.
So my market value of my house is actually $215.
Right. Yep.
Does that make sense?
Yeah.
But again, let's say that the appraised value of my house was $210,
mm-hmm.
but I'm in Michigan and I couldn't give this thing away.
Right.
But the market value of my house is $20,000. Now my house is still worth $210. Like my house is still, market value for my house is still $210,000.
Right.
But it's only gonna sell. Like you're gonna have to. It's not that your house value went down, but you're gonna have to sell for a less value.
Yeah. Yeah.
Does that make sense? There's a fine line there, but it's what it will actually sell for. So again, I try to break it down to market value versus appraised value.
Right. Well, and I mean, Kenneth, I mean, you know, I know you can kind of add on to that, man. I mean, obviously, there's plenty of parts of Michigan that are completely fine and beautiful. Yeah. Honestly.
Absolutely.
But been there.
But I mean, honestly, you know, me and Brandon here in the office, we made the comment. We're like, dude, let's just go spend. Yeah, let's go buy a whole street for like $20,000. You know, and but it's possible. But you know, the problem is you know, it's certain areas like that. Yeah, I mean, you know, when people talk about, I think when they talk about, you know, their value and they're worried about the market tanking, you want to talk about investing into an area like that. Yeah. I mean, you're buying a house for like $5,000. What do you expect? Right. You know, it's like buying a car, right? Mm-hmm. Like if you're paying $200 for a car, do you really think it's going to last you to even the stop sign?
What do you think the return on investment's going to be?
Yeah.
Son, the tires are going to cost you more.
Right. So yeah, I mean, I think that's a pretty good talking point. I mean, obviously, I'd say, like Adam said, majority of the homes will appreciate, and I think a lot has to do with the market you're in.
Yeah, I mean, you're almost. I mean, I don't want to say it's almost a dedicated effort for your house to drop in value, unless you have an environmental effect, right? And I say environmental effect because you have this giant thing that's outside of your control that has caused it to.
Right.
But I mean, generally speaking, your house is almost always going to go up in value.
Yeah. Okay. Yeah. So what else do we got? Okay,
so number 2 for the lender side, it says you can't get a mortgage if you're self-employed.
Getting a mortgage while you are self-employed, you know, I will say, for the most part, self-employed people, unless you're in this industry, will get their income wrong 9 out of 10 times.
Yep.
A lot of people come to me saying they're self-employed, which is fine, great, I support that. In your head, your business made, let's just say, $100K that year. Cool, you made $100K. But what did you take home? If you were tax savvy, like most people will be, I'm not saying everybody, but most people are going to write everything off under the sun to avoid, a big tax payment at the end of the year. Well, that is unfortunately what your income is based on. Okay, if you try to go the traditional route of lending, do conventional FHA, VA, it goes off of what you net after any write-offs. So when people come to me, self-employed people come to me, there's a handful of them that have their chest out, all excited and saying, "Oh no, we're going to look at these homes. We're not going to have a problem qualifying. I know what I make. I'm self-employed." My first initial is like, just show me your tax returns. Right. That's all I got to see, because then I'm going to know. Again, a lot of people think that big. It's almost like it's funny when people talk about their paychecks, or think about like when a teen first works. And they're like, oh man, they're calculating. Oh, I made $10 an hour. I think I've worked 12 hours this week. I should make this. Right. They open up that check, and it's like, wait, hold up. What are these things? Why did I net less? Why is it less?
I know I'm not the best at math, but this definitely is not math.
Math ain't mathing, right? And then you have to explain to them like, hey, surprise, tax, right? So it's kind of the same thing with self-employment. Like your gross number that you're showing me on the top, that's awesome. Like that's freaking awesome. Yeah. But I care more about that number on the right bottom half of that sheet, saying what you netted when you wrote everything off. So you can definitely get a home, self-employed, no issue.
2 years, though, right?
Yeah, yes, 2 years is preferred. Sometimes you can squeak by with 1 year. It's like you have to have some strong compensating factors. I mean strong. Okay, if you're just
it's 2 years.
Yeah, because you got to think. Any kind of self-employed. Commission, it's considered variable income because you're not going to have a set salary, you're not going to have a set hourly pay. Right. So, when you try to look at a year average.
Yeah, and your compensating factor is going to be would be like a savings account kind of thing, or some sort of reserves.
Yeah, strong credit, very low debt, where they don't see you as being a big risk.
Right.
Okay. But even then, it's like you have to get an exception because a lot of times they're still in it. I would say a good chunk of lenders and underwriters are going to kick back and say, hey, you still need 2 years, okay? But, twofold, where maybe you're tax savvy and you're, hard time qualifying for a home, well, we can do a bank statement loan. So can you buy a house with self-employment? Absolutely. You can do a bank statement loan. We base your income off your deposits. We average it out.
Yeah.
So it's a viable option. So no, just because you're self-employed doesn't mean you can't buy a home. Just understand you need to talk with a lender first before getting excited about what you can afford or what you think you can afford. Because, I have
Which we run into almost all the time.
Almost
every time.
All the time.
Does that.
Yep.
Okay, so for the real estate side, myth number 2, so all real estate dealers are the same. Real estate dealers, that's funny. So I'm guessing real estate agents?
Probably. I'll pull this off of Google.
Awesome. Okay. All real estate agents, let's say all real estate, I'm saying agents are the same. That's probably what that's asking. I would definitely say that we're not all the same. It's not that one's better than the other by any means. You have agents that specialize in commercial. You have agents that specialize in investment stuff. You have agents that specialize with first-time home buyers. You have agents that specialize in new construction. Right. You have agents that existing. I was like, so it's not. I would never say there's one agent better than the other agent. Like that's just crazy.
I think it's with really any profession. You have those that have a lot more experience than others, and with that experience comes a lot more skill sets with education, which I think is the driving force for anything.
Yeah, absolutely.
The more you have, the more you're going to know, and in hindsight, you do look like more of a well-rounded realtor than those that do not have that. But it doesn't mean that they're better necessarily. But they are in a sense more qualified.
Well, and you know what? And I didn't mean to cut you off, but the biggest problem I have with a lot of the perceptions a lot of people have is they tie maybe one bad experience with the entirety of a company. They're like, oh, I use the Keller Williams. That last agent screwed me over. But it's just like,
And then maybe that's what it means by dealer. Maybe it's
See,
the company.
but see, and maybe that's what it is, because the same thing goes for, like I said, the lending world too. They have one bad experience,
Yeah,
and
well, you look at, and not to cut you off, but like if you compared, we'll take VU. We'll take VU and we'll take you guys, right?
Yep.
Somebody could have a bad experience with VU in freaking Colorado. I'm sorry. Because they're a national company,
right,
and it doesn't mean that affects, or they denied you of a loan because of whatever,
Right.
But they have different underwriting or servicer requirements than you guys would have,
right, yep,
as agents that work for different companies, different brokerages. I mean, everybody's a little bit different, but at the end of the day, like, we all have the same schooling. And I think the biggest thing with people when they come back to, like, I don't know if this person or that brokerage is good or bad, it's almost nobody in our industry, whether it's on your side or my side of the fence, can we not pick up a phone and call somebody who's actually an expert in something.
Right.
And I hate the word expert, because that's it's almost like a top limiting lid, if you will. I hate that word. But somebody who's extremely experienced,
Right.
like I can pick up, like if I ever run into an issue, like I've been doing this for a while and I've done a lot of deals in my life, a lot of different deals. But there's still people I'm like, I gotta make a phone call because
Right.
I don't know. But
Yeah.
I'm never gonna say that I know everything.
yeah,
But no, I guess this is kind of a weird question, but yeah, I mean, all agents are generally completely capable, and if they don't know, then they have people to reach out
Yeah.
to. The brokerages, doesn't matter if you buy it from blue door, red door, green door, yellow door, whatever brokerage you want to talk about. I mean, it doesn't really, to a
Right.
consumer, it really doesn't make any difference.
Right.
Like, does that make sense? Like,
Yeah.
I mean,
Yeah,
it doesn't-
yeah. Oh,
It should.
100%.
Well, I should say it shouldn't be
Yeah.
any different to anybody. They should get the same treatment across the board. Period. Treated just the same.
yeah. No, I agree. So, do we have a comment,
Yeah. So it's Cameron,
Carmen?
or Cameron. Sorry, whatever. She said, freaking. I was like, what the heck?
I can see her name.
I was like, what the hell? Just hopping on. She says that we look like a jazzy festival boy band.
Yes.
You can be the lead singer.
I'm leaving. You're lucky I got these sunglasses on. I can't read stuff very well
Listen,
right now.
as hefty as I am, I will be the tuba in the background while you guys carol along the way, okay? Yeah.
All right, so number 3.
Okay.
Okay, so we have you can only get a mortgage from your current bank.
I'll be honest with you guys. I will say in the world of mortgage lending, I would say dealing with a mortgage lender, and just obviously it's going to come off as being biased, but I think a lender versus a bank will have a smoother process. Typically faster turn times, typically more stretch, more play and guidelines, more flexibility. I would say from my experience and me being in the industry for a while, there's some banks that are great, some that are pretty flexible, but then you got some that are just like, dude, you could sneeze in the wrong direction and your deal is done.
So think about it this way then. Picture it this way.
Okay.
And this is how I've always I've tried to explain it to people is you have a job title, right?
Yep.
So your job is mortgages. You don't do car loans. You don't do whatever banks do.
Right,
You
right,
don't
right.
do that, right? You do just mortgages, right?
Right.
So if you were to take your car into your mechanic who just does mechanic work, so whether that's engine, suspension, whatever
Yep,
else,
yep.
right? That's what they do.
Yep.
If they're not a body shop or they're not an upholstery shop, right? I don't want to take my car to somebody to do upholstery work that only generally works on engines.
Yeah.
It's probably not going to get the best product.
Yeah. I agree.
It's probably not going to be the smoothest product.
Yeah.
But if I go to an actual upholstery shop
Yeah.
to get reupholstery done on my car, like I'm probably going to have they're going to have better equipment. They're going to be better prepared. They're going to have
Right.
more experience. Does that kind of make sense?
Yeah.
That's how I've kind of explained to people. And it's not that a bank can't do it.
Right.
I'm just telling you that the mortgage lenders per overall have better servicers that they can work with. They have different guidelines, if you will, that they have the ability to work with.
Yep.
They've generally got more experience of how to make things work through. And generally, for the most part, they're a little easier to work with when it comes to contractual timelines.
Yeah. And honestly, we're not 9 to 5.
Yeah, yeah.
Like, seriously, I mean, yes, we have an
Yeah.
office building, but I can tell you.
Yeah, we're 8 to 4.
Yeah. We're 1 up, okay? We like to start early, we like to get done early, okay? But no, a good point. But no, I would say kind of, in the same token that a lot of people, and again, not knocking banks, man. I've got plenty of lender friends who work at banks, man, not knocking them at all. But, brother, when 5 o'clock hits,
Yeah, they don't.
that's it.
Power
That's
off.
it.
Yeah.
We're going to go. Again, not knocking banks at all, man. There's plenty of great guys and great girls, women, that I know. But it's a different dynamic for sure. And I'm forever grateful that I started my career as a loan officer from an actual lending company, because I don't know how easy it would be for me to go from now to a bank or bank till now.
Oh, yeah.
Because
Yeah.
it's just, they're two totally different worlds in my opinion. I mean, we all have to kind of go through the same schooling, but I mean, I enjoy the flexibility because it gives you so much knowledge in so many different scenarios, for sure.
Nice.
Yeah.
Okay, so myth number 3 for the RE side, it says location doesn't matter.
That is so not true. I believe location does matter. Very, very so.
Yeah.
Absolutely.
100%.
So, I guess one thing for the location, this is something that we run into here for the bubble of Clarksville, Montgomery County quite a bit.
Yep.
So my running joke to a lot of people that know me or have ever worked with me, I said there's only like 7 types of houses or 7 different houses in Clarksville. And the reason I say that is because we can find a pretty close like item, right, all over the town. Now I have Clarksville broken up into like 7 different ecosystems, if you will, of Montgomery County.
Yep.
But the reason why I have it broken up that way too, because if I could find, let's say Builder Bob, right?
Okay.
He builds
Bob's
floor
Builder.
plan.
Okay.
Yeah, Bob Builder. He builds floor plan A,
Okay.
right?
Yep.
Well, floor plan A at exit 1, let's say is it's 350.
Okay.
Right?
Yep.
I can take the exact that same floor plan, move it to exit 11
Yep.
on the same 0.19 lot, right, in the same type of subdivision.
Yep.
That house will be, let's say it's $75,000 more.
Right.
Number one, and your taxes are more over there, and your appreciation rate
Right.
is more over there.
Yep. Yep.
So location 1,000% matters. Because you could look at, again, I can afford $100,000 or $400,000 house. You're like, awesome. But is that the very top of your budget? Because
Right.
we may have to look at a 350 because taxes.
Yeah,
Right?
yeah.
If we do 400 at X11, could you still afford it? I don't know.
Well, yeah, no, 100%. And, I'm actually talking to a guy right now where, he's trying to keep his mortgage around, $1,400. And I'm like, brother, I got to be honest with you, you got to look probably Kentucky. You got to look at Oak Grove. He's PCSing here. And the reason why I tell him that, I was like, 1, houses are a little bit cheaper, right? 2, but your property taxes. I mean, right off the rip, okay,
So your property taxes are going to hit you there, though.
for the time being, though, like, you're looking at it, it's like, hey, your property taxes are like $900 a year for maybe the first 1 or 2 years. Then they may go up, but if you're only going to be in the property for 3 years, then you may not have to.
But again, we're going back to the
location.
the location,
Yep.
and he's also trying to now maximize what he can out of
Right.
that budget.
Yeah.
Now, whether that's his actual budget or that's the budget he's putting on himself,
Yeah.
I don't know. He's not
Yeah,
my
yeah.
guy, right?
Yeah.
But I would strongly caution. That's why I tell people I very strongly caution. I was like, you need to figure out what your upper end limit is, not so I can try to get you the upper end,
right.
but so we know where that sweet spot's going to be for you.
Yeah. Yeah. No, I agree. I agree.
And again, if it has to be, I keep saying X11. I'm just saying it could be exit 8. It could be wherever for whatever reason you're trying to go there, whether it's your sports programs or whatever it is. But you have to understand that just because you saw this house over here for this much does not mean that exact same house is going to be that much over here.
Yeah, but I mean, it's true. I mean, you guys have probably seen it where, people work in Nashville, but they don't want to live in Nashville because it's so freaking expensive. And again, location. We're 30, 45 minutes away from Nashville.
But they can buy a $100,000 house here and commute every day, and it still saves them money. Wrap your head around that one.
Yeah, because I mean, so wholeheartedly. I mean, you're talking about like a 800, square foot cube for like $400K in Nashville. And I'm like, $400K, yeah, it's a pretty decent home here.
Yeah.
But I think location is pretty key.
No, 100%.
And it's our job as realtors to definitely educate those buyers on that and explain the reasoning behind why a property is more or less in one location than the other.
And it goes back to a minute ago when I talked about your market value, right?
Yeah,
we don't dictate the prices. It's the market that's going to dictate those prices.
Right. You know what? I just had a good idea for our show. Instead of this is a squirrel moment, but I can create a short on YouTube now that I kind of know how to do it. It's kind of like, sort of like TikTok, but not as edity per se. But let's blindfold Kenneth as a first-time home buyer and show him what is in his price range, and we take him to Lowe's and show him the shed. it is as a sign, like they're like, ta-da! Seriously, like, oh, here you can be like, like him in the back seat, all giggly happy.
You can afford a shed. Yeah, I would not be part of that video.
No, so I saw somebody use the little Icon-type house, the little plastic house. It was like, oh yeah, it's only $400K. It's okay.
I see that on Facebook. I was dying. I was like, that's so true, though.
Yeah.
All right, so you got what we got? Number 4. So it says for lender question.
Okay.
If you can't borrow enough, you will need a bigger deposit.
Yeah.
You can't borrow enough.
Yeah. Listen, I blindly shot at these questions. I read the first 2. I was like, oh, these are gonna be great. And after hearing that, that's just math. Like if your budget is 300 and you're looking at a 350, I hope you have 50K difference.
Yeah,
to bring.
I was like, I'm not really sure how this is a myth. Because these guys are supposed to be myths. Like these are supposed to be like the top myths of mortgage and real estate. And I was like, I had to read this kind of twice real quick before I read it out loud. You can't borrow enough. Or if you can't borrow enough, you need a big deposit. That's not a myth. I don't know.
That's just
so there's this thing called a gap.
Yeah.
The house costs this much and you only can borrow this much. Something's gotta
Well, hey, let me just borrow more money. Unfortunately, like I said, that's the whole point of your pre-approval.
So again, the limit where you're borrowing was here. That's
okay,
funny.
that is a dumb question.
Yeah, I was like, that's dumb. We're gonna skip. We're gonna go down to this other one because that was weird.
Who made this? You know what? Shame on you.
Yeah, shame on you. A lower interest rate will mean a cheaper mortgage. I'm gonna throw one thing in here and say I would tell you that it's all gonna depend on what you're buying.
Yes. So, okay, as a generality, yeah, a lower rate would give you definitely, obviously, it'll shave off, your monthly payment, but it also depends on, let's just say, hey, you're buying in a neighborhood that you were looking at, then all of a sudden you look at this other neighborhood, you're like, oh, well, the rates haven't changed, it's still the same, this should be about the same payment, but now this particular house has an HOA of like $120 a month. Oh, okay. Well, now you didn't account for that. Okay, so or you look in an area with higher taxes. Seriously, you look at higher taxes.
I was about to say that's a pretty low. Like that's a pretty.
There's a lot of factors.
Super general question, because again, there's so many factors that and what define what cheaper is.
Yeah.
Are you talking about your overall interest during the term of the loan? Well, at that case, you might as well get a little bit higher interest rate, do a 15-year, and you're going to pay less on principal. I mean, so that's not to go down like crazy rabbit holes with that, but I think that's pretty.
Yeah, I mean, as a general statement, yes, a lower interest rate would typically equate to a lower payment, but again, it also depends on where you're buying. Does it have an HOA? Yeah. I mean, seriously, you guys look at a townhome.
I got a 2%. Yeah, but you're buying a $900,000 house.
Yeah. You know, and you know, but some people we talked about last week is girl math or whatever math you want to label it as. Some people are like, hey, the interest rates drop. Now my budget's, you know, this, and now I can afford a house of this. And I'm like, I mean, hey, if that's your prerogative and that's how you feel,
That's what you
fine.
want to do. Common Core math at its best. All right. Okay, so myth number 4 for us, it says you need a 20% down payment.
So what's the answer, Kenneth? I'm a conventional buyer. Do I need 20% down?
No.
Thank you. Thank you. Where's my golden star?
You need 40%.
I need to just like slap it on his. Yeah. No, honestly, I would honestly feel like this is more of a me question.
Yeah, I was like, I don't know why. I was like, I don't know why it's down there for us, but
Well, so I'm glad you guys know that. But, you know, the biggest myth I think I hear with conventional, everybody's like, I don't have 20%. And I'm like, guys, I'll be honest with you, like, that's just old way of thinking. Like, 20%, yes. It's ideal if you have 20%, sure. It's nice. But, I mean, to be fair, guys, in today's economy and today's pay structure compared to cost of living, 20% is, if you're a Dave Ramsey follower, I'm sorry. But if you're going to be one of those people who's going to wait to hold for 20%, there's a meme out there that says, oh, I'm going to wait. I follow Dave Ramsey's to save up for 20% for a home. Now the house that you saved up 20% is now $50K more. Now you don't have your full 20% again.
for those of you who can't do that math real quick, that means you're never going to have your 20%.
It's like that insurance commercial with the little fisherman. He's like, you gotta be quicker than that. He's like always pulling the you gotta be quicker than that.
So I guess to ask question I have for you, Daniel, is if we have a buyer,
Yes.
or a potential buyer that is just like, hey Adam, hey Kenneth, like how much do I need? What's a safe way to go about that?
So, obviously, if it's VA, they're gonna get in scotch free, no down
They
payment.
need 80%.
Yeah. yeah. 80% or bust. Honestly, I would say a safe bet, especially maybe if they're a first-time home buyer, 3 to 3.5%. Honestly, you could do a conventional 3% down. You could do an FHA 3.5% down.
Because conventional you can do it, FHA you can do 3.5%.
Yep. So conventional, like I said, first-time home buyers. Right now they have kind of a nicer incentive. But yeah, 3% down is all you need.
USDA is still zero, right?
Yep, USDA is still zero. But I don't talk a lot about USDA. It's a loan product, but it's a rural product, guys, where there's no money down. It's nice, but only certain properties qualify for it.
Which you can find on the HUD website.
Well, it's you just honestly, you go to Google, type in USDA map eligibility.
Yeah.
It's literally the first
And
link.
it'll show you all the parts of where you can.
Yeah.
You can do it.
And the only thing with those is like it's an income-driven loan. So meaning, I'm borrow one, I'm borrow one. You're going to be moving in with me. If you got a job, I have to count your income whether you're on the loan or not. Yep. So sometimes you run into hurdles like that. Yep. I've definitely done them. It's a double underwritten loan. We approve it, then it has to go up to USDA. They have to approve it. So.
I was trying to get sidetracked on it. I just was saying I was kind of going with you in the fact that the 20% thing is I like the way you said that though. It's really just it's an old school way of thinking, and it's not that bad. Like if you had that much money and you wanted to throw down to it, and it made like you and I always tell everybody, it's does the math make sense? Does the money make sense?
Yes.
Are you gonna get if you put an extra 17 or 16% down is what you're basically asking, right? If you were able to do that, are you gonna be able to get that money back out of it?
Right.
At a rate of return that made sense.
Right.
Does that make sense?
Yeah. No, I agree. And a lot of people like to say, hey, if I only put 3% down, am I going to have PMI? Yes, you will have mortgage insurance. But again, it's the trade-off. Are you okay with paying, depending on loan and credit score? Are you okay with adding an additional maybe $50 to $100, whatever it may be, or do you really want to justify throwing again another 17% down to eliminate that?
Now, does VA have PMI?
No. Yep, no MI, funding fee. And you know what? Shame on a lot of you lenders, man. I'm going to call, I wish I could call some of you guys out, but I'm not.
I was like, don't do it.
No, I'm not. The fact that when people shop around, they come around to me, that they've talked to a lender they have an idea about what's going on, but they don't even know what a funding fee is, shame on you. Seriously. It's a simple, basic mortgage 101. That should be the first thing you should be coaching them on. Informational, like literally, it's the basics, man.
It's pretty simple. It's the banks. It's your investment to the bank that you're gonna be good about your loan.
Yeah.
That's basically what it is.
Yeah.
Because you're not putting. Just think, it's a down payment that you're paying for over a period of time. And that's the best way to explain it.
Yep. So, yep, no 20% down.
All right, that was goofy. Shopping around could hurt your credit score.
I would say if you shop around, don't shotgun your credit, meaning like kind of like at a dealership. I would say try to do your best, interview some lenders maybe that you're comfortable with, and try to narrow it down to 3 people. You know, just because you don't want every other freaking lender just hounding you. I think it's good to kind of narrow it down to 3, 4 maybe. Get your credit pulled by them and see what they have to offer. Your credit score won't change for the first, like, typically, 20, 30 days. But after that, yes, your credit is going to update to show that you had 4 people pull your credit at once. Your credit score is probably going to drop a little bit. It's not anything crazy, but if you are one of those people who apply for a credit card every other month, then yes, these hard inquiries are going to catch up to you at some point. I tell a lot of people, if you don't really have a lot going on with your credit, you keep it pretty calm, then these 4, 5 credit pulls that you get from us lenders, it's probably not going to affect it that much.
Okay. Yes, I mean, and from us on the real estate side, almost all of us are going to encourage you to shop around. I encourage everybody to shop around. Even though I'm like, Daniel's my main man. He always treats everybody great.
Right.
But I'm like, hey, look, here's 3 or 4 other people. Call them and talk to them.
And they all
You
lead.
can't tell someone like you gotta go to this person.
No, man, you can't do
that's
that.
Against
And
our
it's
code of ethics.
yeah, and not to mention like we want you to feel comfortable who you're working with.
Yeah.
And if you're just not jiving with this guy, but
You're
yet
just not driving.
it's okay. But and the other side of it too is if just because you had your family friend is a mortgage guy over here, right, or a gal over here, that doesn't necessarily mean that they're the best person for you either. Because if, like, say for example, if they don't do VA loans, right, but they're a national lender that can lend in Tennessee, but they don't ever do VA loans, that may not be the best option because are they going to be able to work through these things for you?
Yeah.
So, and that's not a negative or a hit on anybody. Like, you don't do commercial loans, so it probably wouldn't tell you, somebody would be like, hey, go get with Daniel. He wants to buy this $5 billion apartment center. Like,
No, I would. I would.
Like,
I'll find a way. Yeah. I'll make sure. I'll wait till that day hits, and then once.
Hey man, it's all about the confidence.
Listen, my mom didn't raise no. Okay? Understand that. I will find a way. I'll ask James to open up his pocketbooks and do something. We'll all put our money in together and find some way to do it.
I really know what we're doing. Probably I'll go to jail, but okay. Okay, so it says the next one is going to be you can always sell a property quickly. Let me repeat that one more time. You can always sell a property quickly.
Yes, and if it doesn't sell within 2 days, fire your realtor right now.
So yeah, definitely,
100%,
definitely.
1,000%.
So I will say yes, you can always sell a property quickly if you drop the price low enough.
That's true. That's true. Yeah, your house is 300. Put it on the market for 150.
150.
150.
150. It'll sell quick. The reality behind it, guys, is if you have an average price house, it's going to sell in the average time that the market is dictating.
Yeah.
And I know that sounds kind of like a generalized, blurry question, but it's all market dictating. If the market's moving fast, then your house moves fast. If the market's moving slow, like right now, not a whole lot's going on right now because people's minds aren't in shopping; they're in holiday mode right now, which is what it is. It happens every year.
Yep.
But also, if you have a house that's $1 million,
right?
Well, with the way the interest rates are and how everybody's been a little bit slow to buy, anyways, a normal house, how fast do you think that house is going to move? Now you went from a buyer pool that was 5 billion people to 2.
Right.
Not 2 billion. 2. You know what I mean? So now we're looking for these specific niche people,
right?
That are going to A, qualify, and B, able to actually pull that trigger.
Yeah.
So yes, you can always sell a property But I would never guarantee to anybody it's going to go quickly.
Yeah, I agree.
I would tell you that, like, when I go to listing appointments and they're like, how fast things going to sell? I'm like, I think we have a chance of it moving pretty quickly. I was like, I tell you, I was like, I would never guarantee it.
Right.
But if we go with XYZ plan that we've talked about, I think this is the best approach to selling your house.
Yeah.
But again, the aliens invade tomorrow.
Right.
All bets are off, man. Like, I don't freaking know, man. So.
Yeah. No, I agree. I definitely agree.
You got anything else you want to add on that, or?
I didn't mean to put you on the
Oh,
spot.
no, you're good.
No, I don't want to put you on the spot, but I'm going to put you on the spot. What is the average right now as far as a property?
Like days on market?
Yeah, last time that you looked, what was
It was right around 60 days.
it? 60 days.
It was like 50. I think it was 57, and that was like a week or so ago. I honestly haven't really looked up the actual time. But understand too. That's kind of like that's everything. That's everything. So that's your high prices and your lows all together.
Okay.
Is right around 60 days. So your average price house is still probably right around 350, 375 is about the average price house for here.
Yeah.
So if you think about that, and if you look at the MLS and how long things are on the market, those houses are still staying on the market about a month and a half. Unless it's just a super cute hot house, everything's like staged right, like it's one of those things where it just goes real quick. Generally speaking, it's about a month and a half before anything moves. I mean, most of my listings are sitting for a little bit.
Yeah.
And they get showings. The thing is with it is I'll get flooded with showings, and then I'll get an offer a week later after they've looked at 20 more houses.
Right.
Which is the same thing I do. I tell my buyers the same thing though. I'm like, look, we don't have to make a decision today.
Yeah.
Like we can go look at 5 or 6 houses. You guys can take a day, think about it, call me up if you want to look at it again. We'll go look at it again.
Right.
The last thing I want to do is rush you into a decision.
Yeah.
And I think most people are kind of in that mindset right now, and they're trying to be thoughtful about what they're doing.
Yeah.
Versus 2, 3 years, 4 years ago when it was just like everybody's just freaking firing offers off everywhere.
See? Hey, that's why I wore the hat.
Just roping it in.
If you guys haven't caught on yet, letting you guys know this is what we anticipate next year. You know, it's going to be the wild, wild
I
west.
think it's gonna pick back up.
And I will wear this to your closing in the midst of June.
All right, so it says, so for you, it says young people can't get on the property ladder. And for what that's saying is that, so the property ladder being that starting to invest into properties is what that's referring to. So young people, and when I say, I mean, that's a very loose term obviously on this page, but we'll say 20 to 25 year olds, 18 to 25 year olds, they can't get into property investing and start building future wealth for themselves. I completely disagree with that.
1,000% disagree.
Especially where we're located right now.
Yeah, I was like,
Obviously, with military,
Yeah.
you know, the number of young soldiers that we have falls right into that age group.
100%.
And
But
100%.
you know, honestly, man, being in this industry, it opened up my eyes quite a bit because you know I've had a gentleman. He was like 20, not even old enough to freaking buy a drink at the bar. For Christ's sakes,
You had a lady, she just turned 18.
it was a
It wasn't my client, it was one of yours.
yeah. She was active duty.
Yeah, that's what I'm
Yeah.
saying. I was like,
Active
she had,
duty.
like just turned 18.
Yeah,
It was like,
just turned 18.
Let's do this.
Let's do it.
Yep.
But no, like I did a loan for a kid. He's 20,
Yep.
already 6 figures coming out. Like,
Yep.
and I was like, at 20 years old, you're still pulling in 6 figures. Like, where did I screw up? Like, where? Yeah. I was like, where did I screw up? Because I'm sitting here looking at this dude's finances. Like, I'm like, wow, dude, you're killing it. He's like, oh man, that's awesome, man. I appreciate it. And I'm like.
And he don't
like,
even know, man.
No, he doesn't.
He
And
doesn't
I'm
have a
like,
clue,
what
man.
the heck, man?
You're like, man, you need to go. You don't need to talk to me. I'm not worthy. I am
I'm
not
like,
worthy.
let's switch roles, man. You're supposed to lend me the money. Like, you're 20 years old and already making 6 figures. Like, what do you?
Yeah, no, I completely disagree with that. There's so many different ways that you can get into investing into properties. This just is waiting for the live signal.
So, okay.
Thing sucks today. There goes. I think it's coming back on. Anyways, so there's so many ways that you can get into it, whether it's through a multiplex. So we're talking a duplex, triplex, quadplex, right?
Yep.
You could do it into somehow into that way. You could, whether you just basically buy hack a home, and what I mean by that is you buy a home and you fix it up while you live into it, and then you turn that into a rental and you go buy something else, or you sell it and then go buy. There's literally, like, dude, I could talk about this for hours and hours and hours of different ways that you could invest and start building some wealth for yourself.
Well, and I think it's cliche, man, but I think, I always say that I wish I would have known then what I know now. Like, it's probably the most cliche thing. Cliche, but it's true, man. Like, at the age of 20, let me crank back. At the age of 18, you know what? I'm going to go one step further, okay? I have a diapers. So Britt Rayleigh, she passed on my information to somebody who's still in high school. Mm-hmm. She was like, I graduated in May. Mm-hmm. I'll be 18. But I'm ready. I should have this job lined up already. And I'm like, and she's like, I currently work now and I have my own business. How long have you had your business for? 4 years. And I'm like,
wow. So at 14,
she does photography. She does photography.
Mm-hmm.
I was like, do you file taxes? She's like, yep. I'm like,
yep.
And so I'm like, and you're coming to me. I was like, this was probably one of the coolest conversations I've had with somebody. Like, dude, she's in freaking high school, ready to invest. And awesome. I'm like, that is somebody that is extremely, extremely mature.
The biggest limiting factor with all of this is mindset.
It is mindset.
Mindset and self-discipline.
I was a complete ding dong. Yeah. Like, the only thing I cared about was, like, let me go. I got done serving for the day. I'm going to put this for gas. Okay, I got about $100 for the bar. I'm gone.
I'm gone.
That's what it was. Seriously, man. I mean, don't get me wrong.
I don't even need any food. They've got peanuts there.
Oh, peanuts. That's cute. I thought maybe the water would kind of suffice some of my hunger, but like no, I was like water, $2 PBR. Nah, PBR. Yeah, it was a whole thing.
That's a great story, though.
But, no, it's cool, man.
That's awesome.
Yeah, very, very cool.
So number 6 for us, it says renovations always increase property value. Okay, so this is a near and dear one. No.
I like the dramatic pause. Just like no.
So renovations. The question is renovations always being underlined. Always increase property value. That is not true. So if you were to, it would depend on what the status of the house is that you're going to renovate to bring it up to. So yes, in a nutshell, yes, it's going to increase the property value that if you renovate your house and make it all nice and fancy. But the definition of renovation, what is your definition of renovation would be the first question I ask that person. Before you begin down this road, what is your definition of renovation? Is that painting the walls? Is that putting new cabinets in the kitchen and countertops?
No, it's putting artwork over the hole.
Artwork over the hole. Then that's going to improve value. But the next question to them is like I would look at doing a CMA, if you will, like a comparative market analysis, right, of what their house could sell at very tip top, everything. The best case scenario we're looking at is this. I would give them a optimistic, I think we're going to be somewhere in this ballpark when it sells.
Right.
If the amount of money that you're planning on spending goes over that,
right,
then you're losing money.
Right. Yeah.
So I guess in a nutshell, yes, renovations don't always, they can increase. But then, so what about a pool would be a prime example. A pool is not necessarily a renovation, but let's say that you redid your kitchen.
Right.
And you put all new countertops, all new countertops, all new cabinets, and some fixtures and stuff. Okay, well, you're 10, 15 grand just in that.
Right.
For a kitchen, and then you decided to put a pool in, right?
Right.
Because there's my property renovation.
Right.
Well, the pool's going to cost you, let's say the pool costs you 120 grand.
Yeah.
Well, the appraiser's going to give you 10 grand for your pool.
Right, yeah.
And he's going to give you some added value for your cabinets because that's usable stuff. That's actually like a thing in the house. They're going to give you some, but if you 15 grand for the kitchen remodel, he may only give you for an upgrade to match the other thing, other houses around
Right.
it, he may only give you 8.
So-
you're down by 50% of what you put in.
Okay. So what if I used beaten up wood from the Titanic I found in the ocean and used it to resurface my cabinets, and I put 14 karat gold handles on it? Is
So-
that going to increase my value?
So fun fact. Ready for this?
Hit
There
me
was
with
a house in Nashville.
it. Okay.
All right. I'm not going to give out locations or names of who owned it, but there were some famous people that owned this house.
Okay.
And all the floors in 3 of the houses, because it was a house, and there was I think there was 3 other sub houses on the property.
Gnarly. Okay.
So it was pretty crazy. So anyways, all the floors in the main house actually were repurposed from an antique. One was an antique, what you call it, like a candy shop, like a
Okay.
famous antique candy shop.
Okay.
That was like a historical thing, and they
Right.
repurposed all the wood. Now they also had documentation
Okay.
that that's where the wood came from,
So does that give it value?
so it gave it value.
Really?
It did. It didn't give it like oodles of value, but it wasn't but the appraiser didn't walk in and be like, man, what the heck's up with these crappy floors? it was like no, they're actual antique floors.
Okay.
Now again, that's a very subjective, weird.
Right.
That's me calling an appraiser and
Okay.
being like, so fun fact about the house. I was
Okay.
like, don't really know where this is gonna land, but if you had actual 14 karat gold pools on your drawers, I mean, if you had receipts and those were tested as actual 14 karat golds, I mean, I would write that up and submit that as a documentation to the appraiser and being like, hey, there's $10,000 worth of pools just in this house. And if they're conveying with the house, then I mean, that's technically part of the value. So, but again, it's up to that appraiser. I was like,
Like full
he
disclaimer.
could be like, and I tripped on the way in here, so no. You know what I mean? I was like, I don't know.
So, okay. Well, if that's the case, I want you to go get me like a World War I cannon,
Done.
and I want you to place it smack dead in my living room.
I like it.
And then I want somebody to say, hey, this is historic.
This is the story.
This is historic. Okay. Well, I mean, that's-
Random fact. I mean, it was just kind of a random thing. I mean, it's all. I'll tell anybody every time that it's all up to the appraiser.
right.
I can tell you what I can show you on the list of the appraiser page, if you will,
Right.
that says like these things add value.
Right.
But at the end of the day, like I'm
Right.
not the appraiser.
Right.
Like I am not the appraiser.
Right. Yeah.
So
Well, it looks like we had another couple of comments, but
Jonathan Dodge says,
oh god,
GA is going down. Then he puts FSU.
Fun fact: that is my next door neighbor.
Oh, okay.
And he is a massive Florida State fan.
Okay.
This morning, I sent him a text
Gotcha.
with some Georgia stuff, and he's like, "Your chant is stupid."
I think it's just this.
Oh, this is the.
Yeah.
Yeah.
See, I'm just being humble about everything because I'm a Michigan fan. And yes, you're number 1. But we're playing Alabama.
I thought there was. I thought I saw another
Or,
comment though. There was one that was. It came up and then it went away.
Oh, I don't know. I've seen a bunch of people watch, and that's it.
No, I saw somebody else comment and then it went away.
There's no telling where it's going to land. But
Well, it's funny that John, so he's the big Duramax guy, and he's got that sick bike I was showing you guys. Yeah.
nice.
But
Yeah, because see, this is still going.
that's still going. But no, dude, John, he's funny, man.
Yeah.
He's a funny dude. And I can't wait because I got so much stuff I'm going to be doing as the weeks lead up to it. And he's going to hate me. He's actually going to hate me. Knowing him, so I know you guys don't watch a lot of football, but the Florida State, they're the Seminoles.
I watch
and yeah, well, I know you do. But the Seminoles. And their whole thing is like Chief rides out on a freaking horse with a flaming freaking, like, I don't know what you call it.
It's like a staff or something.
Like a spear.
Yeah,
A
it's a
spear.
spear.
And it's on fire, and he goes out to the midfield,
Yep.
and then just smacks it in the middle, right?
He's an Indian.
Yeah.
Yeah.
But either way, I was going to light like my Georgia pole, like a flagpole with the Georgia flag on it, and just smack it in his yard. Ring his doorbell.
As you get shot running away.
No, I thought he released his Rottweiler on me, man. And I cannot run that thing.
All right. So here's one for you, Dan. It says there's no point in looking into mortgages until you've found a property.
Stupid. Absolutely stupid.
That's literally
Yeah.
backwards.
Honestly, and especially if you don't go okay. We've talked about it on the podcast plenty of times. You don't want to fall in love with a house that's not in your budget or that you can't get approved for. Because if you let's say you meet us at an open house, $400K. And then you're like, oh man, this is awesome. Let's go look at the house next door. You show them. All right, well, let's talk about finance. Did you guys get pre-approved yet? Not yet. Okay, well, we do it, and now you're only approved for $300. Now, when you try to go look at houses that's in the 300 range, it won't amount over the googly-eyed $400K that you were just sitting in. And it does kind of put a damper. I mean, not saying that there's not plenty of homes within your budget. It's just you are so starstruck by the $400K price point that anything below it, it's not going to excite you.
Right.
No, yeah, you're gonna get it's the equivalent to you go to a dealership and you're like, I want to drive this ridiculous freaking whatever, right?
Yeah.
I want to drive this freaking Lamborghini, and you're like, whoo hoo hoo, and you get out there and you just go freaking ripping and roaring down the road, and you're like, this is awesome, and they come back and they're like, so you can afford this Corolla. And it's not the nice Corolla. It's a base model that you didn't even know they still made with crank windows.
Hey,
And then
hashtag
you-
bring back crank
Yeah,
windows. They're actually
yeah.
very easy to work on instead of a dang automatic.
So, and I say that because like if you had to go from one extreme to the other, like it would feel very depressing.
Yeah.
Absolutely.
And it's not that we don't want you to afford or want you to be able to get the Lamborghini, but it's about expectation management, and we
Yeah.
never want you to. Like I would never. That's why like when people aren't pre-approved, I'm like I don't really want to show you anything until we figure out where you can
Yeah.
be.
Want to get your hopes up.
Because I don't ever want to go show you something that you're just that you and your or who just you fall in love with,
Right.
and it's like, and then you feel like you can, yeah. And then not to say that you can't achieve that or you can't get that. That's not what I'm saying. But if that's not in the ballpark, like it's demoralizing.
Yeah.
It's
Oh, it is.
heartbreaking. Like we've been through it 100 times with people. I'm like, guys, I there's nothing I can do. Like,
Yeah.
you don't qualify. You don't qualify. Like
Yeah.
I can't help you with that.
Or I mean, even payment wise, guys. I have a lot of people who's like, yeah, I love this house, and I've been approved, for $500K. This house is $400K.
Well, prove
but
and knowing the numbers are two different.
yeah, exactly. And I was like, yeah, but I want my payment to be, $900 a month, and I'm like, sweet. Well, let's go ahead and backtrack. And the $500K, I'm glad you're approved for $500K.
I'm gonna need you to put down $450,000.
So, Mrs. Davis asked, what price range do you start asking for pre-approvals before showing?
Ooh.
That's a good question.
I want a pre-approval immediately if possible.
Yeah, I mean, the way I look at it too is I don't really like whether it's a $100K price point or $1 million price point. I mean, we all look at the buyers the same. The whole objective is to get you guys into a house, and regardless of if you want to look at a $100K home or $1 million home, like you have to show proof, man.
Well, and that's and if we're out at the a subdivision, right? We're out at the Boulders, we're chilling out. We meet some people come over and they want to look at a couple houses. I'll go open a couple doors just so we can talk for a little bit. I can try to figure out what looks good. But at the end of the day, like guys, I'm only going to show you a couple. I'm definitely not going to go schedule something to go drive somewhere to kick somebody out of their house so I can show you a house that you're not like that, guys. And no agent is going to do that. They shouldn't do that. But because the thing is, like it's protecting the buyers kind of from themselves in a sense too, because we got to make sure that we're doing the right thing, and we shouldn't be being irresponsible and just open the door to anybody who wants to go look at something anyways.
Yeah, no, I agree. I 100% agree. So
But no, you need to have a pre-approval, and guys, and getting a pre-approval is literally like the very first thing before you start even looking at physical
Yeah.
properties.
Yeah.
You need to have the conversation with the lender, whoever that lender is.
Daniel,
Daniel.
anybody else is wrong.
And you need to have that hard conversation of what does this look like? Because
Yeah.
again, if it's not something that's attainable today, but it might be in 6 months,
Yeah.
then that's fine.
Yep.
Then we wait for 6 months. Stop looking.
It's establishing a game plan that is setting the buyers up for success.
100%.
And not
Yeah.
for failure.
100%.
Really to set everyone
Yeah.
up for success.
Yep, 100%. All right, so we got, okay, so you must invest locally.
Must what?
And invest locally. So this kind of actually goes back to the very first part of the conversation of Michigan.
Yeah, I mean, honestly, you can be anywhere and buy a property.
Yeah,
You know, as long as you got the cash.
Yeah.
Yeah, if you're willing to fork up the 20%, 25%, whatever it may be.
Because if you're not gonna, well, yeah. So I guess that's where the 20% thing would come in too. If it's not
Yeah.
going to be your primary residence,
Yeah.
if it's going to be a investment, then you're probably going to need significant more down payment than a 3.5%. But yeah, I mean, we were joking around about earlier. Let's go down to Michigan and let's go buy up an entire,
Yeah, street.
subdivision or
Yeah.
street.
The beer
'Cause you can
street.
buy wherever.
You should do that. Put all the doors have your logo on it as you go by. Yeah. Yeah. You be the HOA manager.
If you don't have a beard, you can't live here. But no, I mean, you can invest anywhere. It really, I mean, how many people would rather? Well, I should say would rather, but well, think about military people, right? So they buy a house here, awesome, okay, and then you go to your next duty station and you buy a house there, or maybe you buy a house here, but then all of a sudden you want to buy a house in your hometown,
Yeah.
because that's where you planned on retiring or something. So you buy a house there and you
Yeah.
get it rented out.
Yeah.
You know what I mean? Or you know, however that flushes.
Yeah.
I mean, that's just a silly concept. You must invest locally. I think it's not a bad idea to invest locally.
Well, I mean, but it may also go with like, you know, obviously, like, hey, I work in Nashville. Do I have to buy in Nashville? No.
That's a good call
Yeah.
too.
Yeah. You don't have to.
No, there's
You know, as long as you're not going like, you know, hey, I'm trying to buy a house 2 hours away. Everyone's gonna be like, hey, yo, bro, your commute's too far. Like, this doesn't make sense to us. You know, it's just one of those things. Like, yeah, you don't have to be in the same area you necessarily work. You can be on the outskirts. You can be fine. You know, maybe a few counties, you know, over, whatever have you. But yeah, I mean, you don't have to buy local, for sure. Like, I know plenty of people who work here, but yet live in Springfield.
That's what I'm saying. I was like, there's so many, especially here. There's so many outlier areas, especially if you want to use Nashville. I mean, if you're kind of working north or west, if you follow the highway, right? You've got Jolton, you've got Greenbrier, you've got Springfield, you've got Cedar Hill, you've got Pleasant View, you've got Ashland City, you've got Cumberland, Fern. You know what I mean? Like, there's all these Palmyra, there's all these places that, I mean, technically you're in a different zip code or whatever, but I mean, in all reality, you're still local. I mean, it's still in the immediate area, really.
Yeah. So that it?
I think you got
If they're done, just burn
the
them.
mortgage payments cost more than rent.
Depends.
What you buy?
What you buy? I'll say, you know, for the folks that probably pay like $2,500 for rent, there's probably a good probability you can get to a house where it's probably a little bit cheaper. Seriously. I mean, obviously depending on your needs and what you're looking for, but there's probably a good probability we can get you in.
But you can't look at it. So I guess my take on that is this, and this is what I tell people, and this is, you know, is it cheaper for me to rent than it is to purchase? Well, I guess it would depend on what your outcome is and what your desires are.
Yeah.
If you don't want any attachment here, if you don't want anything holding you to here, anything at all, then renting might be the way for you to go.
Yeah.
But understand that if you're going to hold renting because, or you're going to leverage yourself to, I think I'm going to rent because interest rates are high.
Right.
Well, guess what, clown? Renting is 100% interest.
Yep.
Like you get nothing back out of that.
Right.
So if you want to build some wealth,
Right.
if you want to do some investing into yourself,
Right.
purchasing is the way to go. Now understand that investment costs money, right? You have to put something into an investment.
Yeah.
So let's say for fun math, we'll say that it's going to cost you $300 more a month
Sure.
to purchase than it would to rent. Okay? Mm-hmm. Now, with that being said, let's say that $300 is still completely within your wheelhouse of actual affordability.
Sure.
So it's not a drain on you. It's not stressing you and the family. It's not hurting anything. It's
Right.
completely affordable.
Right.
Let's say that you do that for 3 years.
Okay.
Okay, so that's $3,600
Yep.
that you've paid in 3 years.
Yep.
What if I told you that a property has the potential to appreciate, let's say 40 grand or 50 grand?
Right.
So your rate of return, you paid $3,600 for $50,000. Or even after you paid commissions or whatever else you had to sell the house, let's say that $3,600 still equaled out to 30 grand.
Right. Yeah.
Dude,
Yeah.
you can't get that rate of return on anything anywhere, ever.
Yeah. Yeah. And I think that's why I
It's
stress.
an investment. It's
It is
not
an
a
investment.
cost, it's an investment.
Yeah, but and like I said, that's why we're in the industry, man, and that's why I don't pressure anybody, man. We lay out the facts for you, we lay out everything to help you make an informative decision.
Mm-hmm.
But at the end of the day, man, like I'm not gonna be nothing against car salesmen, but you guys are used quite a bit. But I'm not gonna be a car salesman, where I'm gonna be walking out there with
Not
my
to
hands
kick
in my
you
pocket.
down, but I'm about to.
But like I'm not gonna waltz out there and be like, this car looks nice. I think I can picture you in it, huh? It's just one of those things where I'm just like, guys, look, here's your layout. If you're comfortable with it, great. If you're not, then we can talk about it, see what you are comfortable with.
Yeah.
And if that's still not in your wheelhouse and you feel like there's nothing else out there for you, then maybe it's not your time. That's fine. And there's nothing wrong with it. We're not going to look at you any different.
I want you to be comfortable.
Yeah.
I want you to be comfortable with your decision. I want you to be comfortable with what you're about to go through and be basically held to.
Yep.
Because the worst thing in the world I want somebody to do is to buy something that they can't afford.
Yep.
Or they're not happy with.
Right.
Or any of the other crazy things that come out of it. I don't want that.
Yeah.
Because it's just gonna make everything terrible.
100%. Yeah, I agree.
And then they're gonna get cold feet halfway through it, or they're gonna try to, it
Right.
always turns into a mess. When
Yeah.
we could have just taken a step back.
Yeah.
And be like, let's take a breath for a minute and let's reassess this and make sure that this is what and how we want to go about
Right.
doing this.
Yeah, no, I agree. Well, we've creeped up on a little over an hour, so that's cool. Didn't feel like an hour. So,
I've been asleep the whole time. Sunglasses on.
yeah. There's a video of this guy laying out in a lawn chair. He's got sunglasses on. This guy tries to pick his wallet. He opens it up, takes some money, and then he pulls the guy's glasses up, and the guy's just like staring at him the entire time. And so he puts the money back into his wallet, puts his sunglasses back on, and it was so funny. I was like, this is dumb. So we're slowly gaining traction on the YouTube videos.
Dude, I took a picture.
Yeah.
I was so pumped. I meant to send it to you.
Yeah. Well, so look, hey, it's Clarksville Real Estate Adventures on YouTube. Slowly growing. We got 10 subscribers now.
Nice.
Cool. Yeah, we got
It came up on YouTube as a short.
yeah.
That is
We're making progress. We made a couple of shorts, and the one where literally I sent it to you and Carmen. Yeah, there was like instantly in one day it was like at 1,500 or 2,000 views, and I was like,
That's awesome.
whoa! I didn't even do anything. I was like, I didn't even promote it yet, so I was like, this is freaking cool.
That is awesome.
That's funny.
But no, in all seriousness, this podcast will be up on the YouTube channel. We'll make some snippets, some shorts, and all that. But it's cool. I'm very excited learning things about this. I'm excited to see this new program that we got, to see if it clears up the mics.
Hopefully, yeah.
I think that was a night and day difference. So, but yeah, I think we're creeping up on everything and coming up to an end. And I think we should do a nice little. Let me see. We already did the Christmas hats. want to do something different
Okay.
next time.
All right. Sounds good.
What do you want to do? What,
Two things to add real quick. One, I have a bunch of people, both real estate agents and buyers, or potential buyers, asking for new videos of us. They are missing watching our funny videos that we used to do. I know we were rocking and rolling with those during the summertime.
Yeah, we got to get back on them.
Dan's the man behind all of that, and yeah, people are hungry for it.
Okay.
Another thing, Daniel, I think you might want to plug your guys' sweater party.
Yeah, next Tuesday. It's a ugly Christmas sweater party. We got some giveaways we'll be doing. So 4 to 6.
Oh yeah.
You guys come on out. It'd be fun. And I think, it's just going to be a good time. We're going to have some sweets in the back as being catered, I think, by Gardner Title. Which, if you guys have never tried some of this man's,
Are those sandwiches from that one?
Yes.
The one of it?
Yes.
Okay, yeah, those are
Yeah,
great.
yeah. And we're going to have
Wasn't
cider.
it like the barbecued or
Yeah.
smoked bologna or
Like
something he
homemade,
had?
yeah.
Oh man,
Dude.
they were
I'm
good.
excited.
At first, I was going to call him on
I
his
didn't know that
bluff.
was gonna be there.
I was going to call him on his bluff and be like, dude, you didn't make these. There ain't no way. There ain't no freaking way. Lies. Freaking lies. No, he does.
Oh, that's awesome.
So they'll be here sponsoring that. And we do, like I said, we have some gift baskets and little small
Sponsoring
giveaways.
Some cool swag in there.
Yeah, cool swag, hot cocoa, and cider.
Oh yeah.
Yep. Yeah. So,
yeah.
honestly, it's a little bit more low key. We want to kind of try to keep
gotcha.
it. I mean, last time we definitely had a good turnout, but I personally just invited. I still got to invite a few more, but that's why we really had to make a big post about it. But
Gotcha.
but either way, no. Seriously, if you guys are free, bring the ugly. I love a good Christmas sweater. I'm going to tell you what mine is because it's not tacky. It's just dumb, which I really like dumb stuff because I think it's funny. It's a goose. It's 2 gooses fist bumping, and it says goosebumps. And then I'm going to get little Santa hats on them.
That's awesome.
Yeah, it is. It's cool, right? It's dumb. It's like goosebumps. So, but yeah, so be on the lookout. Clarksville Real Estate Adventures. That's what I'm going to be putting the podcast on. Journey Home Inspection. We'll get them in next week. I know they got a busy schedule, so shout out to Journey.
Yeah.
And honestly, if there's anything that you guys want to see, anybody else, hell, we can start bringing on some other agents as well. I think it'd be pretty cool to kind of see different perspectives for sure, and kind of get a flow and see what they see, and just it would be nice. It'd be nice,
Yeah,
you know.
I like
And I definitely want to get my boss on here. I'm gonna get James on here,
He's watching right now.
huh?
James Ferguson is watching.
Lies. That man does not know how to operate Facebook. I don't know who. Maybe it's one of the grandkids who's got the app open right now. But I do not believe James Ferguson is watching us right now. But no, I'd like to get James in
Kellen
here.
Skins are running around the house.
But no, I think the more we grow and all that. But yeah, no, I think definitely trying to promote the YouTube channel, get some of that going. I think it'd be pretty cool.
Yeah, exactly.
Well, cool. That's it. So see you guys next week.
See you next week.
See ya.
That'd be it.